Alphabet, Tesla, and other big tech names are going to be reporting earnings this week. Joining us right now ahead of those numbers, Dan Flax, Neuberger Berman, senior research analyst. Good morning to you, Dan. Let's just walk through some of them. What do you expect? What do you want to own ahead of the numbers? And what maybe don't you want to own ahead of the numbers?
We're tracking these companies very carefully, as you know, Andrew. What we're seeing is that relative to when they gave guidance a few months ago, there's a little bit more clarity in terms of, the very near-term business. So if we look at Google, for example, which I'm comfortable owning ahead of the numbers, I think they're continuing to transform search. They're adding AI overviews into the experience. The key is really delivering value to the users on one side and the advertisers on the other. And so cyclical cross currents will impact them. But what we look for in these periods is which companies can innovate, invest, and come out stronger. I think Google's one of them. Amazon, which we'll get next week. Yes, their tariffs. We're comfortable buying it ahead of those numbers. I think their cloud business it's over $100 billion, has very strong double-digit growth for several years to come. They have an underappreciated advertising business. A lot of names, though, are going to be, I think, calling out some of the trade and cyclical shifts and changes. But we look for select opportunities. And as I say, Google and Amazon, Apple is another one that I'm comfortable buying right here and right now.
You said Apple's one you're why so?
Yeah, because even though the demand environment is difficult, there are, of course, going to be continuing concerns around China. What you have is you have the iPhone install base continuing to grow. Customer satisfaction with the devices remains high. You have customers have been mixing up to the Pro and the Pro Max, so that supports that business. You have a $100 billion services business, which I think remains very well positioned. Apple Intelligence, there's work to do. I think we'll see more from them over the next several months. And the experience with generative AI remains very early. I expect Apple to clearly invest and innovate a lot more and, of course, partner with others.
What don't you want to own ahead of these numbers?
A lot of companies are in transition. And so, for example, I'll take Hewlett-Packard Enterprise, which bought Juniper recently. And they're a company that's trying to drive faster growth in their networking business, where I think there's opportunity. The networking, infrastructure businesses like a Nokia, for example, those businesses are tough. I would contrast the traditional telecom equipment business with a company like Motorola Solutions, which has actually gotten out of that business many, many years ago, pushed hard in their core public safety franchise, where they have terrific opportunities, and they've expanded very successfully in key areas like video, command center software. And so that's a company that's come through a period of transition and transformation under CEO Greg Brown. Faster growth, expanding margins, and very strong cash flow. So that's a name I like at current levels.
Okay. Dan, we are just about out of time. I wish we could talk longer. What was the single earnings company that you're looking at that you think will represent the rest of everything else?
Microsoft, Andrew, and it's because their cloud business, the Azure business, I think remains incredibly healthy. And that really attests to this transformation of the economy as all industries invest in generative AI, new capabilities to transform their businesses, capture growth opportunities. I think Microsoft's Azure business will embody a lot of those changes, growth, and opportunities, even while cyclical headwinds persist in some areas.
Right.